the fun side of rather questionable behaviour. Welcome, Mere Mortalites, to another round of the Mere Mortals book reviews. I'm your host here, Kyron, coming in live, coming in clean and fresh with a nice camera on the 23rd of July, 2025. And as you might surmise, this is the podcast where I shield my trading strategy. 3 months, guaranteed profits, $1 million plus. Who's willing to join up and pay me $1,000 a month? Okay, there's not going to be any of that today, but there is going to be some reminiscences of perhaps a stock operator and of the trading strategies of one in this book here. Reminiscences of a Stock Operator by Edwin Lefevre, I believe is how that is pronounced. This was published in 1923. It's about 288 pages in length. I read it on the Kindle, so it took me, I think, about 10 hours reading to get through. It's kind of hard to know because I was traveling whilst reading this. This is one of my travel books. So what is it? It's a fictional first-person account, but it's kind of based of the life of a real-life stock trader in the early 1900s, whose name was Jesse Lauriston Livermore, aka Larry Livermore. And basically, he describes his early life. So even though a different author wrote it, it's describing the life of Larry, of where he grew up, how he got into these bucket shop tradings and was essentially trading the ticker prices. And this is in the days of the tickers. We'll see a little section of that in the next chapter if you're watching, and if you're on a modern podcasting app where you can see the chapters. And then he goes on to getting to Wall Street, starts using leverage, and finally is getting to the point where he himself is able to move the market and start doing some market manipulations towards the later part of his career. So what will you find within? Amusing stories of like trading hijinks, of memorable characters in the Wall Street era of those days, unbelievable trades where he made millions buying or shorting certain types of stocks, of the emotional discipline required to be a good trader, and then also how you will go bankrupt and go broke many, many times if you try this stuff. So let's jump into the actual themes and questions. What is a stock market operator? How do you become a good one? And for the purposes of simplicity, I'm going to pretend that Larry Livermore is the actual author of this, and that this is told from his first-person account, even though it was a separate author who was writing this. We'll get more onto Edwin Lefevre in that section of the podcast. So he starts his tale about his obsession with numbers. And essentially what Larry used to do was he would watch the ticker, and he would be in these shops and he would just seeing like the ticker price goes up, it goes down, like it'll jump from here to there. And he would essentially watch these, and there was something within him where, you know, if the price dropped from 130 to 128 and a quarter in a 10-minute period and it behaved in these certain manners, he would then get this feeling of like, it's going to go up or it's going to go down even harder. Nowadays, I guess you would call this trading analysis or technical analysis, was a better word, which was probably an early probabilistic prediction method. And, you know, he himself in these days in these bucket shops where it was kind of a little bit dodgy, but you'd have the stock market pricing and you would be able to buy and sell within this operation. You know, it was purely just momentum driven, I guess is what you'd call it. So he knew nothing about the companies, like valuations of them, PE ratios, forward guidance, the interest rates, macro factors. All of these were irrelevant to him, although they started to play more of a part in his trading in the later sections of his life. But when he was a young kid, he would essentially go into these shops and he would make a fair bit of money doing this as well. But as happens, you start to make a bit of money, and then he was getting kicked out of these places because he was actually costing them money. He was, you know, beating the bank, so to say. And so he then moved on to another area, going to join Wall Street, where, yes, you could join bigger firms. You could play around with large portions of money, and you could lever up, and you could get more connections, be closer to the heart of the action. So This, along with the next point, was what essentially made him an operator, or what he would describe as a stock market operator. Operator being the term for, you'd still probably use this nowadays for someone who's got like a fair bit of skill in something. They're an operator. They know how to like execute. They know how to move and behave in certain ways to get the desired outcome that they want. And so Larry was not so much obsessed with making money, more he was obsessed with being right. He wanted to prove that his predictions were right. So he talks about all the time about, if he was talking with friends about a certain stock, unless he was like, he would certainly never give advice unless he already had a position open on this certain stock. There's no point talking about things of just hypotheticals and stuff like this. You have to put your money where your mouth is, was his essential motto. So what else would he do? He would frequently cut vacations short to race back to, his nearest broker, and if not, getting into the harder action in Wall Street. If he thought there was going to be a big movement in price, if he thought there was some danger looming on the horizon, if he thought there was an opportunity. And it was interesting because I think it's a rather subtle distinction between being right and earning money, because if he was right, he then earned money. So you could then say, what is the difference? It's the kind of subtleness of like chasing happiness versus doing things that make you happy. If you're chasing happiness for happiness' sake, you're not going to really obtain it. But if you do things which you enjoy or bring you meaning, and then happiness kind of comes along for the ride. I guess that's probably the way I would describe how he views happiness and earning money. Sorry, not how he describes happiness, but how he describes earning money. It's more about him being right and correct. So I think this is a helpful reframe because it took away some of the negative emotions that come with watching your net worth go up and down, and instead it was just like, am I right or am I wrong, which is a bit more of a neutral kind of feeling. It's not tied to perhaps your status. And he was talking about how he wanted to get rid of his emotions, so the greed, the anger, the pride, the vanity that tripped up many of his peers, and took away the kind of cutting edge of being able to be rational, of having nerves of steel, of being able to predict the future. For him, it was just, am I right or am I wrong? That was essentially what he was saying in this. Now, as he grew with his resources, he had to operate differently. So he couldn't just rely on watching a ticker go up and down. He then had to be like, oh, okay, there's different types of games that are being played when you're using large amounts of capital, where he himself could move the price with his actions. And so it's important to remember this was the early 1900s in the United States of America. There were really only 100 stocks that could be traded. And of these, there was probably only 5 at any given time that were worthwhile of keeping your eye on, and the rest were just kind of duds or not doing much. And so it's kind of funny. His last chapter talks about how it entered an era where it was impossible for a single person to be on top of the market because there's just so many stocks going on, and there was 500 or 600. Nowadays, that's just the benchmark that you use for, the S&P 500. So it was certainly a very different period where one person could be really on top of the stock market. And if you had enough money, I'm talking like $1 million, which, remember, $1 million back 120 years ago was a fair bit of money. That was where he started to have to go like, oh, okay, if I do this and someone else is trying to short me or short the stock, that could actually have an impact. And if I'm using leverage, I could get wiped out. So I need to, hedge my bets by doing this or that. These were all the sorts of things that started to then come into play for him. So an operator was someone who had a big line, aka had an opportunity to use big leverage, and could move the market substantially. And we're in the game to make money. So that is what a stock market operator is. How to be a good one is a rather interesting question. And the reason for that is because, as we'll see later in this in the author section, he was good at it, but he also wasn't. So take all of these next bits of advice, or what I kind of gained from this, with a grain of salt, because it's good advice, but also it didn't end out, his whole life didn't end out spectacularly for him. Take grain of salt needed. So a couple of lessons encapsulated in a short sentence that I took from him. And it was kind of unexpected for me, because I feel these are rather good rules of thumb, whether you are in the investment, speculation, or gambling side of putting money into a stock, into a cryptocurrency, into a bond, into a investment of whatever sort. He himself was certainly more on the speculation side of things. I'm more on the investment side of things. And the gambling side of things is just idiotic and not a good use of your money. What's the differences between all of these? I kind of discussed them in some of the previous book reviews on financial markets, so I'm going to leave that here for the moment. But it was interesting because I felt this was rather applicable for myself, even though I would never day trade like he does, which requires a level of attention, detail, and effort which I am not willing to put into, and which I also don't think particularly works. Once again, his at the end of his life wasn't so great. And anyway, here we go. You're a good stock operator if you make money. No other metrics matter. So it doesn't matter if you have more fame on Wall Street for pulling off certain bets, if you are more meticulous, and if you're a brigado, you talk all about your gains, or if you are more of a quiet, self-centered, or inwards person. None of that really matters. What matters is if you make money. Now, reliance on your own judgment is key. So his biggest mistakes were from taking tips from other people, from trying to help out friends, or being swayed by a charismatic individual. When he lost money was when he didn't follow his kind of gut instinct. And there was this real kind of tension in the book between him using his head and then him using his gut for when to make the right decision. And to be honest, I don't think he did a very good job of articulating when it's best to use kind of the rational more side of your brain, and then when to use this instinctual gut feeling, which perhaps is telling you things which your rational brain has seen and maybe interpreted, but hasn't particularly understood. And so that was kind of a tension in the book, which I don't think was really resolved. Now, the best way to operate is if you're unhindered by external sources other than the ticker and general news, was when he could make the best calls. So it wasn't when he had his wife telling him about, this guy who was at the dinner with her, and this guy knew that she was the wife of Larry Livingston, and so then he recommended to her a certain type of stock, so she's recommending it to him and trying to influence him on that. No, the best for him was when he had a cool, level, calm head. He seemed to be a bit of a unique savant as well, based on his success as a kid with, very little capital. I'm talking like a couple of dollars, and of being able to simply look at a ticker and know whether it was going to go up or go down. He probably had an aptitude for pattern recognition of a very certain type related to numbers, which most of us don't have. So remember on that. He made most of his money on big bets in the right macro environments, and when it was easy to tell the general trend. So once again, it's kind of like opportunities would come along only every couple of years, and you have to be wide awake and prepared for them. And if you try and force an opportunity to happen, if you try and force to make the quick gains or something like this, you're going to get wrecked. And this probably happens, like I said, on the every couple of years time scale. To take advantage of these moments, he needed patience and kind of a stoic emotionless. His worst trading, for example, was when he was in debt to other people and owed $1 million because he listened to other people's advice and got swayed by a charismatic individual, had a short on, which he shouldn't have had on, and then got wrecked. And he was also using leverage. he was then in debt to many other people, and so when he had this looming thing of debt over his shoulders, over his head, that was when he felt like constricted and unable to operate in this best manner. And it wasn't until he paid all of that off. He did a kind of subtle trick where he told everyone, like, hey, I'm not going to be able to pay you off. So essentially went bankrupt, started from a clean slate, made a whole bunch of money, and then was able to pay all of these people off many years later. So he needed this kind of psychological trick to say to himself, hey, you're now unburdened by this obligation to other people. Now he could operate in the best manner. Setbacks must be faced with courage. He went broke 3 times and bankrupt once. Each instance required a strength of will, of a reliance of himself, and that was another key aspect of the book. He was very reliant on himself. He trusted his own judgment, and everyone else could like kind of go to hell, essentially. Like, it's not that he didn't want to hear their opinions, but he didn't take it into consideration when it came to him and to what he was going to do with his money and his decisions, which then allowed him to also find this kind of seeking of the truth, or seeking of whether he was correct or not, because it was all on him. And he then couldn't blame other people for, oh, they said this and he gave me this tip, and turned it out like he was just stabbing me in the back and was offloading on me or anything like this. You must always take the opportunity to unload paper profits when operating at a large size. So, when he was in the millions of dollars and, hundreds, thousands, tens of thousands of stocks, it's funny because at the time, I think all the stock prices were within a range of like $1 to $100 or something now, whereas nowadays you could have a penny stock which is worth 0.001, and you can also have a Berkshire Hathaway which is worth 200 grand or something. So he was denominating in numbers of stocks as if that meant something, whereas nowadays it's like, I don't know what that means. So for the smaller person, that kind of advice would probably be something along the lines of cutting losses and letting winners run. With fame comes opportunity and bizarre rumors. So, when he started to get famous as being a big stock operator with a big line, and people knew he had a lot of money, people knew he acted and behaved in certain ways, then all sorts of rumors would come up about how, he died, or how he was all in on this one certain stock which he'd like never even heard of, or things like this. So that was something where he was saying there's nothing you can do about it, but there's certain opportunities that fame allow, access to certain types of people, or to opportunities which you wouldn't get elsewise, and that it's best to just try and make use of those. People can manipulate a market very briefly, but the market will win as a whole. So if you try and suppress the price of a stock, which, once again, the whole point of a stock is to find out like what's the actual value of this thing, and the whole purpose of a stock market is to find the value of this share in a company. What is this company going to be worth? What are its future cash flows? Things like this. He started to get more into, I guess, the fundamental analysis, the later portions of his career, where he'd start going like, oh, there's this big San Francisco earthquake that's going to disrupt train lines. That means this train company is going to experience this, or this, grocery company is going to experience that because of these type of events. Oh, geopolitical stuff. Oh, there's war occurring. Oh, there's, a banana shortage in wherever. He played around with a lot of these things, and, there was this thing of cornering the market, where you corner the market in wheat. So you buy so much like wheat options, or I don't know what it was back then, where you controlled, let's say, 20-30% of all of the wheat in the United States. Well, that has a very serious impact on people's ability to like eat, for example. And so it was kind of just after this period, the 1900s, where the SEC was formed to stop people like Larry from affecting markets individually and for his own game. He always said that he acted in an ethical manner according to the rules. But, if there's no rules, then he's probably screwing over some people as well, let's be honest. And here's a little brief quote from him. One of the most helpful things that anybody can learn is to give up trying to catch the last 8 or the first. These are the 2 most expensive 8s in the world. So if you're riding a bubble up or riding it down on a burst bubble, trying to time the exact top or trying to time the exact bottom is not going to work. Like those are very expensive 8s, and the bulk of the money you can make is in those 6 8s in the middle, where you can catch it near the bottom and ride it up and sell it near the top. But trying to time it exactly, if you do that, you're just going to like round trip essentially one way or another. So those were all the kind of things I took from him. Let's jump on to the actual author himself. So the actual author was Edwin Lefevre, born 1871, died in 1943. He was a journalist come investor himself, so he was more of a writer, I believe, and an academic, but had some money and was in the investing world, which I think put him in contact with people like Jesse Lauriston Livermore. And so I imagine he knew him in person, just the way the book was written. But I don't know that for actual sure. So Larry, we'll talk about him as well. Edwin, unfortunately, there's just not that much to talk about him. He had published, I think, another book or 2, had some articles written and things like that. But largely, this book is his most renowned book, which is even talked about nowadays by financial people. So it is a financial book for sure, and kind of a financial history book, I guess. But he himself there's not that much to talk about him. Now, the actual other things about Larry are probably more interesting. So he was a very similar age, so born, late 1870s, 80s, around there, and died at a very similar age in the, I think, just before World War II. He ended up becoming extraordinarily wealthy. At some point, he'd have hundreds of millions. He didn't really flaunt it in the book. So I never got the feeling that he was excessive with his wealth, or at least he would talk about his vacations and how he had like a nice car and things like that. But he wasn't braggadocious about it, which was interesting. But he had hundreds of millions, which nowadays would be in the billions. So he was a pretty wealthy dude at certain points. And this gets to the point where I was hinting at earlier. He would eventually lose it all. And not necessarily on the cars and luxury, but probably because he was a guy who kept chasing the dragon. He loved the game of stock operating, of working the markets, of being involved. And he also did it with leverage and in a risky manner. He went broke multiple times and got it all back when he was talking about it in this book. And, it kind of ends off with him presumably wealthy and doing well, but he went broke again. And so eventually he died by suicide, and in fact in heavy debt as well. So a rather unfortunate end to him, which is also why, listening to him talk and about stock operating and day trading and things like this, he was never content. He never found, I guess, a nice point in his life where he was like, I've got enough money, or, I can set aside a whole bunch of money that'll never be touched, and that it'll just be in like a passive, very low risk index fund. Didn't even have index funds back then, or in bonds or something like that. He seemed like a guy who was incapable of that. And so now the actual writing itself was rather witty and insightful. I rather enjoyed reading it. The stories that were being told captivated me, pulled me in, was like, oh, this guy's kind of funny. Oh, that was an interesting experience that he had. And it made him to be rather humble and real about himself. So, for example, he wouldn't claim that he traded intelligently. he learnt how to trade less unintelligently. So he kind of put himself on the back foot a lot and was saying like, I'm constantly learning and I'm trying to get better at this. Although he wasn't in pursuit of the truth or even particularly moral, he was grounded in reality, and I did like that about him. He took on responsibility for his own actions, and this being money-wise, and if he was right, he was right, and if he was wrong, he was wrong, but he couldn't blame other people, and I kind of rather respected that about him. He had an independence, a reliance on himself, and certainly of not playing the victim, which I thought was pretty good. So the ticker was his ultimate judge of reality, and if he was scammed, if black swans occurred, it was ultimately his fault and his responsibility. Speaking of the last chapter, which I mentioned before, where he's kind of rounding it up and saying like, things have changed in the stock market, and we've now entered a different era. You can't corner the market, and they're putting some regulations in, this being the government or even just the way that the stock and the ticker operated and things like this. He was kind of already at that age reminiscing about his own period, let alone us here 120 years in the future. And what he was saying was like, yeah, there was things that I was doing which were okay, and like I couldn't really do anymore. He would likely be viewed as a dodgy bad guy nowadays, especially just because of the way that he was manipulating things. And like I said, his ultimate judge of reality or morality was whether he was right or wrong, whether he made money or not. It wasn't whether this was good for the nation. It wasn't whether if this stock was something that was beneficial and something that was trying to improve, or if it was a war stock, for example, of somewhere creating ammunitions or things like this. He didn't care if other people lost a whole bunch of money. He was in it just to know whether he was right or wrong, and that was judged by whether he was very wealthy or not very wealthy. So I guess you'd call him someone like George Soros nowadays, where George Soros broke the Bank of England famously in the 80s, and by shorting the pound, this caused a tremendous amount of havoc for other people. It was probably going to happen anyway, but he was the guy who did it, and so a lot of other people experienced misfortune because he was correct in predicting reality / making it happen as well. Because there is perhaps a future where that wouldn't have happened and there wouldn't have been another George Soros stepping up and doing that. So, he could corner stocks. This guy, Larry, knew inside information. He would kind of form cabals with other people. He would backstab them, or, before they backstabbed him, he knew how to move prices, how to unload on the public, how to use media to whip up hype of something so that he could unload it. It's not his book, but was likely written with his blessings, and so it was all rosy, more or less, but I would not be surprised if he indulged in a lot of illegal, financial, serious shenanigans, which we would condemn him for. Even reading the book, I'm still like, yeah, I'm very ambivalent / not particularly approving of his style, and would probably be like, if I met him in real life, be like, yeah, he's not killing people, but he's not necessarily a great guy. I've met some of those types of people before, and it's interesting. It's interesting to meet them. They've got a very unique view of the world. So we're going to wrap it up here. Similar books recommendations. Although it's a book about the 1900s stock market, a reminiscence of nostalgia, if you will, it's just as much about a man. So I think amoral is the best way to describe Larry himself and his occupation perhaps as a whole. His black and white lens fixation on money doesn't really open him to questions of right or wrong, of the matters of conscience, the health of an industry, of a market, what's the meaning of life. He doesn't really give a shit about all of that. He just wanted to know whether he was right or wrong, and he did this by making a shit ton of money. The stock market at that time, I think, allowed for a lot of unfair practices of if you knew and you could argue that it's still the same nowadays with VCs and hedge funds and market makers, and there is a lot of manipulation still going on. It's hard to know. We never really live in a free market. I would say, and a free market implies that anyone can do anything, and so therefore he was okay. He was fine to do that. So it's this tension between right and wrong, of being correct or incorrect, of you tipping the scales and whether that's a good thing or a bad thing. This book isn't really about that, and it's just about how to make money and his time of how he made money. So putting all that aside, it's a very fun read. I found it super engaging, with a lot to be learnt about financial psychology. If you're a day trader, I would say this is a must read, just because he was very good at it for a certain period of his life. And you get to know about the kind of vibes of 1900s Wall Street, which was a rather interesting history lesson as well. So overall, I'm going to give Reminiscences of a Stock Operator by Edwin Lefevre a 7.5 out of 10. Pretty solid book. I really quite enjoyed it. If you want a similar book, the book review I'm doing next week, hint hint, is actually rather similar. So in terms that it's like a financial history of a certain individual, almost like a biography, if you want to call it that, which is going to be about Jay Gould and written by Trumbull White. Michael Lewis's Liar's Poker is probably something that's the most similar to what I've read, maybe even More Money Than God by Sebastian Mallaby. Has this, financial aspect, but also the characters within the financial world, and gives you a feeling of the time period, whether it be Wall Street, and in either case, all the cases I'm listing here is Wall Street, whether it be Wall Street in the 1960s, 70s, 80s for More Money Than God, or whether it be the 90s, 2000s for Liar's Poker. So a couple of different options there. Final sections here, value for value. If you've enjoyed this podcast, I just ask that you return that value in some shape or form. Many different ways you can do this, reaching out with a like, a comment. I see Mere Mortals Podcast, aka Juan, in the chat here, was helping me out with just the live stream and some of the things about it. So commenting, joining in live is super fun. If you want to give me your book recommendations, what is your favorite book of all time? What is something you think I would enjoy reading? I love to hear these things, so please reach out via any of our channels. And then finally, if you want to support in a monetary fashion, because it does take some money. I'm going to buy a new cable for this camera here, for example, which will cost $13. So if you want to send 13 Australian dollars through, that would be very much appreciated. You choose the value that you got from listening to this, from watching this perhaps, and you can just send it back to us, and it would be very much appreciated. So doing that via the PayPal link down below. If you join a modern podcasting app, something like Fountain, Podcast Guru, True Fans, Cast-O-Matic, you can join in live there, as well as be able to support us directly within the app through the use of a boost. And yeah, that's it. I am live on 11 a.m. Australian Eastern Standard Time on a Wednesday, so just ask AI to convert that to your time zone, and would love to see you in. I put up the schedule notifications usually a couple of days beforehand, so you can see exactly when on YouTube or on your podcasting app. What's coming up in the future as well. So I mentioned The Wizard of Wall Street and His Wealth by Trumbull White, which is about Jay Gould. I'm reading a book at the moment about the Athenian Navy, and then I'm going to have a whole bunch of library books coming in my way shortly, and I'll start to sort through those and read those as we go. So I am about a week and a half ahead at the moment in terms of my reading schedule. Looking forward to reading more in the future, and I hope you're looking forward to more book reviews coming up as well. So we're going to leave it there for today. Ciao for now. Kyron out. Bye.